Microphone 1.
Thank you, Chair. I would like to reintroduce Mr. Sanderson.
Hello again. I hope young Jimmy Chalmers is listening to this, might like to incorporate it while he's rethinking capitalism. As a small player in the loan market, I'd like AMP's views on a funding proposal designed to give equity with the major banks. Currently, there are two common frameworks for bank lending: full reserve lending, where an authorised deposit-taking institution must hold 100% reserves against loans they issue. This is the popular perception out there. Capital regulated lending, or capital constrained lending, governed by Basel III, enforced via risk-based capital requirements. This system is in place today, where banks create money through lending, thereby extending money supply. The model I would like AMP to consider is the Chicago Plan. A proposal developed during the Great Depression by the University of Chicago economists Henry Simmons and Irving Fisher, and later endorsed in varying forms by Milton Friedman and others. The goal of the plan was to promote financial stability and fairness by removing the ability of private banks to create money. Instead, money creation would become a state function via, in this country, the Reserve Bank of Australia. Under such a system, ADIs, like AMP, would borrow funds from the RBA at near zero interest rates and then on lend to customers. This would level the playing field with the larger banks and currently benefit disproportionately within the current system. Other potential benefits of the Chicago Plan include the elimination of bank runs due to fully reserved deposits, end of private money creation, reduced risk of inflation, credit bubbles and boom and bust lending cycles, greater monetary control and financial stability, and a reduction in complexity. Would AMP agree that a Chicago Plan-based system where private banks no longer create money and the central bank funding supports lending on equal terms would enhance AMP's competitiveness, stability, risk profile, profitability and shareholder return?
Look, I don't know enough about the model to be able to make a comment, to be honest, but... Pardon?
Is anyone on the board familiar with the Chicago Plan?
No, but we're here to talk about, the business of AMP, not a different banking model. So, out of interest, I'll go and have a look at it and see what I think, but it's not something that we could do. From what you described, it needs to be done by the government.
I'm sure that the RBA could use Section 39 to get somewhere near it, but it would have to be legislated, therefore the reference to young Jimmy.
Yep. All right.
Okay.
Thanks very much.
Thank you.